Before we jump into today's video, I'd just like to shout out to Ben Sherman for sending me some free clothes and sponsoring this video. Alright, let's jump into it. Today we're talking about lender's mortgage insurance. With the property market booming at the moment, should you take out LMI on your housing loans to get into the market sooner, or should you wait and save your money, build a bigger deposit, and then jump into the property market? I'm going to break down these questions today and hopefully provide some clarity to you on my thoughts of what you should do in this environment. Now, this is not financial advice, and I'm just throwing my thoughts out there here on YouTube. And I've really been enjoying doing this and making these videos for you guys. So if you could subscribe to the channel and drop a like on this video if you find it useful, that would really help me out. So I appreciate it if you've done that. Now, what is lender's mortgage insurance and why should you potentially use it in this market? The basic definition of lender's mortgage insurance is insurance for the bank if you default on the loan, but it allows you to have a higher LVR or loan to value ratio when taking out debt on a property purchase. So you might be able to get a 90% lend on a home loan with LMI and an 80% lend without LMI. This might mean if you had a $50,000 deposit, you could buy a $500,000 home instead of only being able to buy a $400,000 home. LMI gives you the ability and capability to leverage your money and buy a more expensive asset or pay a higher price in the market than you would otherwise be able to. Now, what are the risks associated with LMI, and is this strategy a good one for you? So the risks are that you actually have less money in the deal, and therefore you are more at risk of negative equity if property prices fall. Now, negative equity means that you have to pay the bank back money if you were to sell the property at a loss. So if you leveraged your $50,000, bought a $500,000 house, and prices fell by $100,000 to $400,000, you would owe the bank $50,000 because your loan is $450,000 and the house is worth $400,000 if you were to sell the property in that market. Now, you can hold through markets and through growth and declines, and over the long term, your property portfolio is likely to grow as long as you can sustain the repayments back to the bank. Now, LMI in our current environment is an interesting topic, and that's why I'm making today's video. In my personal opinion, if it's your first property or you're looking to rapidly grow your portfolio, LMI might be a good fit for you. Emily and I have been lucky enough not to use LMI in our purchases so far, but we would consider it in the next 12 months to make our next purchase and get in sooner rather than later. Now, that means that you're willing to take on more risk, but you also might get more reward by jumping in sooner. As the market is hot at the moment, instead of waiting another 6 to 12 months, if you're able to use lender's mortgage insurance to your advantage and buy your first investment property or grow your portfolio with a risk management mindset in place, you'll be able to get into the market sooner and see the growth that is happening and that is forecast to happen for the rest of this year. Now, you also need to be mindful of the flip side that you're increasing your leverage and the amount of debt that you're willing to hold by undertaking the strategy using lender's mortgage insurance. So as long as you're aware of both the potential benefits that you might see this growth and also the risks that if prices were to fall that you might owe money back to the bank, and you're willing to take that risk, LMI might be a great tool for you in your portfolio to grow, expand, and increase your net worth at a quicker rate than you could save. Em and I are looking to do exactly this, and if we have to, depending on the property purchase and the price that we buy at, we might do that later this year to jump into our next property. It's something that we've considered in the past, and it's something that you should look at and not completely rule out as well when making a property purchase. With prices going up so quickly at the moment, it's difficult to save your money as fast as properties are appreciating, and that is the whole reason that LMI is a hot topic in today's environment. If you have any thoughts or questions on lender's mortgage insurance, leave a comment down below. And if you found this video insightful and interesting, drop a like on this video and subscribe to the channel. I'm going to make more videos about property, investing, and renovations in the near future. So I'll see you in the next one.